Good morning, everybody. We've got a lower trade in the grain markets here early on Friday. It is 6:30 a.m. Central Time. March corn futures down 2.5 cents at 6:01 and a quarter. March soybeans down 6.5 cents at 13.81. March Chicago wheat down 9 cents at 7.37. March Kansas City wheat is down 12 and 3/4 at 7.55 and 3/4. March spring wheat down 13 cents at 9.10 and 3/4. If you guys are listening on the podcast, appreciate it. As always, leave me a rating or review if you have not already. If you guys are watching on YouTube, hit that subscribe button, like these videos, help me to grow this channel. My goal is to get up to 5,000 subscribers. I think we're at about 3,500, so hit that subscribe button if you are not already subscribed. If you'd like some additional info from me, guys, go to my website, standardgrain.com, click on Grain Marketing Plan, check out this subscription service. I send an email out to all my subscribers every single morning, which includes every overnight headline you need to be aware of. It includes my text message service, grain marketing recommendations, cash sales broken down by crop year, by percentage. You get my subscriber-only videos, and I talk about these every day, but I do a new one every day. I did a subscriber-only video yesterday regarding the Fed and the grain markets, and it was called "Could the Fed Kill the Corn Market?" And I talked very specifically about what the Fed is trying to do and how it could impact the grain markets and other markets as well. So it was interesting stuff. I had a lot of positive feedback from that. So if you're interested in that sort of thing, certainly check out that subscription deal here this weekend. We've got a significant heat wave headed for Argentina. The grain exchange there said this: a prolonged and intense heat wave will begin, which will affect most of the agricultural area. Rainfall will remain low to zero in most of the agricultural area. So you've got a widespread area of Argentina that is going to see temperatures well above 100 degrees over the next 5 days. A lot of that's going to be into South Brazil and parts of South Paraguay as well. Most of Brazil in general is going to be much cooler than normal actually over the next 7 days, but some significant heat accompanied by essentially no rainfall in Argentina. So that is problematic. The exchange in Argentina reduced their crop ratings. They went from 58% good to excellent last week down to 40% in corn this week. That's a big drop. A lot of those same issues going on again in South Brazil, Paraguay. All of those have had drought problems, and a lot of that damage is irreversible at this point, according to a lot of people kind of in the know. So we absolutely have some South American weather problems still. Now, if you go out into the extended forecast, this stuff looks bad for the next 7 days. And then about January, say 17th or so, there is some rain expected to return to parts of Argentina, southern Brazil, Paraguay. Is it going to be enough? Are the forecasts reliable? Do the forecasts shift over the weekend? I don't know. So near term here, the next 7 to 10 days, you really don't have much. And then, maybe 10 days from now, you see some rains return to these problem areas. But that's a big if, of course. And these forecasts are always subject to change. They could change over the weekend for all I know. We do have a USDA report next week, and traders expect modest decreases to USDA's projections for the South American corn and soybean crops. The average trade guess for the Brazilian soybean crop ahead of the report is 141.6. USDA was 144 last month, so that's a modest reduction versus what some of the private groups are saying. The Argentina soybean crop 48.1 expected versus 49.5. Brazil corn 116.2 expected versus 118 last month. Argentina corn 53.6 versus 54.5 last month. So we're looking for in the report, specifically in this USDA report, the trade very much expects USDA to not be so aggressive with their production cuts, whereas the private groups, as I have shown you guys the last couple of days, have been much more aggressive. Agril at 133.4 for Brazilian beans, StoneX Brazil at 134. USDA is probably not going to be that aggressive with any potential production cut. We had our export sales report yesterday, and sales were absolutely terrible, absolute garbage across the board. Net corn sales for the current marketing year, 256,000. That was down 80% from the previous week, down 81% from the prior 4-week average. Soybean sales were a marketing year low, 383,000. That was down 27% on the week, down 63% from the prior 4-week average. Wheat sales were also a marketing year low at 49,000. That was down 76% versus the previous week and down 87% versus the prior 4-week average. When you look at accumulated sales for the current marketing year, corn sales are off 7% versus last year. That's not a big problem. Soybean sales are off, I think, 27% versus, 24% in soybean sales versus last year. That's a problem. Wheat sales are off 24% also versus last year. So I think in regard to soybeans and wheat in particular, this export situation is problematic. I will say that with this big sell-off in the wheat market, we're becoming a little bit more competitive globally, and it would be a real nice thing and much very, very much welcome if we were to see some additional export business as a result of these lower wheat prices. We did sell some soybeans to Mexico yesterday, not a big amount, 102,000. That's like 3.7 million bushels. For this marketing year, which ends August 31st. That's a small sale. It's barely enough to hit the flash sale threshold. Nothing exciting there. Crude oil market traded above $80 per barrel for the first time since mid-November yesterday. So back in like late November, early December, we had this big sell-off and we had this panic associated with the new COVID variant. We didn't know what to make of it. And now the market has rallied basically all the way back and very close to its October highs. So you can expect prices at the pump to rise. AAA quoted the national average gas price yesterday at $3.30 per gallon, up from $3.28 last week, $2.29 last year. You can expect those prices, pretty much fuel prices across the board, to increase as a result of this. You know, those retail prices tend to lag just slightly. There's some unrest or some concern regarding the situation in Kazakhstan in particular. One analyst said this: the upward jump in oil prices mostly reflects the market jitters as unrest escalates in Kazakhstan and political situation in Libya continues to deteriorate and sideline oil output. I don't know if that's the actual reason why we're rallying. Maybe it's just they don't think this new COVID variant's the biggest deal in the world, and we see demand and general commodity inflation. But in any case, you've seen a pretty significant rally back in the crude oil market. This thing was down to, $62 in early December, and we're back close to 80. That's a pretty big jump. The cattle market finished higher yesterday. Cash cattle was reported, I believe, 136 to 140 on Thursday, so kind of a wide range. The box beef market was up yesterday. The board was up just marginally in the fat cattle, a little bit better in the feeder cattle. Hogs were up yesterday as well. In the outside markets this morning, the U.S. dollar is just marginally lower. The S&P's up 6. The Dow is up 6. Bonds up a little bit. Precious metals up just a little bit. Crude oil up 50 cents in the March WTI 79.38. Have a great weekend, guys. I will talk to you on Monday.